Hi, everyone. Welcome to the CPA Lady podcast. My name is Marjorie McPike, and I am your host. Thank you for joining us. Thank you for listening to us on Anchor, Spotify, wherever you can find podcasts available. And please like, subscribe, and share. Also, if you're watching us on YouTube, please do the same, like, subscribe, and share. The goal of the CPA Lady podcast is to bring you information that is going to cause you to grow, to help you to understand accounting, taxes, personal finance, generational wealth, anything that will allow you to leave an inheritance to your children's children. So thank you so much. And I am happy to have with me today, Tiffany Burns of the Lotus Legacy. She is a personal finance coach. So Tiffany, will you tell us a little bit more about yourself, please?
Yes, thank you so much for having me. So I'm Tiffany Burns. I am the founder of the Lotus Legacy, and I am a personal finance coach who helps moms become more mindful with their money so that they can enjoy as much of their money as they can now while still creating a legacy for their babies. So I love that you brought up the generational wealth because legacy is in my name for a reason, right? We all want to create something that outlives us.
Yes, awesome. And then I noticed I just picked up that you said moms. So do you find yourself working more with moms compared to families, or why did you pick moms?
I picked moms because I know the journey that it took me to change my life with my finances, and a big reason was my children. My children were one of the reasons why I found myself in debt, because I was buying all of these things that I thought my children needed, and my children were my reason to get out of debt because I wanted to give them a different life than what I was currently giving them and what I had growing up. So I focus more on the moms because we have that heartstring that is, we'll do anything for our children, but without self-sacrificing, right? So we can do that while still taking care of ourselves. So I do focus on moms so that we can find that balance.
Okay. Do you work more with moms, or do the fathers kind of get involved in it, or is it more like the mom's kind of leading the way and then
Yeah, this is a girls club. So I do have women who are married, and they are just kind of building and gaining their own financial confidence. So when they have these conversations with their husbands, they're empowered to have opinions and thoughts and decisions in that conversation, and they can, speak up for themselves and for their children, really advocate for themselves in a really healthy way. But I also, kind of guide them on how to navigate those conversations. So it's not like a dictatorship. It's like, I learned how to do this from my coach. Now we need to do X, Y, and Z. But it really is more about the confidence and the empowerment so that you feel like you can be a part of those conversations.
I like that, because a lot of times you find where the moms are being provided for or taken care of, and so they don't feel as though they have a voice when it comes to the finance. So I like the empowerment and the confidence part of that.
Yes. And, I also know that mothers are nurturers. Women, we are nurturers. So, we are our children's first teachers. So if we have that confidence, we have that knowledge and all of those things, then we can also teach our children, which is part of the generational wealth, right? So you also have to not just build it, but then you also have to be able to teach your children so that they can maintain and sustain it.
Awesome. So do you have, how would someone start working with you? Or where do you find that the greatest need is when someone comes and starts working with you?
Yeah. So, it's that cycle of living paycheck to paycheck where you just feel like you just cannot get out of the cycle of not having enough money. Usually it's people with a lot of debt, and they just can't figure out how to get out of the debt. Whether or not you're saving money, right? You're putting money in savings, and then as soon as you put money over there, you've got to transfer it back out. So those are some of the biggest pain points, right? Just that day-to-day financial stress of living paycheck to paycheck, just the overall overwhelm of debt, and then the guilt of transferring money from savings every time, something, an emergency happens or something, and just not being able to build and sustain a savings. So those are some of the biggest pain points that my clients come to me with.
Okay. And then do you have like a basic, kind of like a standard program that you take them through, or is it all based on individuals?
So I used to do a pretty customizable program, but now I'm going to more of a structure. The framework is a little bit more structured because I realize that it really all starts with the mindset. So there's so much mindset work that we do first, right? So we have to start with the mindset. And then we go into your financial awareness. That's when we pull off the Band-Aid. We see what's going on with your money. It's almost like the financial audit, right? We see where your money is going each month and what your spending habits are and what that looks like. Then we can build a budget, because if we don't do all that other stuff, then the budget is kind of, it's just a guessing game, right? This way we're using facts and data. And when we do the mindset stuff first, it makes it easier for you to create a budget, because we know why we're creating this budget. We have the mindset and we're creating an environment to create and sustain a budget. So you don't just kind of give up on it. And then we go into paying off debt and saving money. And that's when all the fun stuff happens. But, you know, those are the main 3 steps. Is we do the mindset, we do the financial awareness, budget, and then we go from there.
That sounds scary.
Says the CPA. Says the CPA. You know, it's funny because I actually, a couple weeks ago, I started doing questions on Tuesdays, and I asked people last week, what was the scariest part of their finances? And multiple people put taxes. That's the scariest part of their finances for them, is their taxes. So it's funny that you said that, you know, that sounds scary for someone.
Yeah. So maybe my approach needs to be the mindset. It's like, let's work on your mindset, and then we can do your awareness to find out where you are, and then come up with a plan in order to how to change that, which is really what it is, you know. You can't make any changes until you know. Yeah. Right.
Yeah. So, you know, with the mindset stuff, we identify what you want your life to look like. What are your goals? You know, why are we doing all of this? Why are we creating this budget? Why are you paying off your debt? Why are we doing this? At the end of it, there's somewhere along the line, there's usually something about a legacy and generational wealth, right? But we really have to iron out the details of what that looks like. And then, you know, identifying what kind of mindset we have towards our money now, and really start to work to shift that and dismantle old and limiting beliefs, which oftentimes are inherited from, you know, our family, our culture, society. And we really have to just break those things down so that we can prime ourselves for all the work that we have to do.
Right. I like the mindset and the why. So it's like I was speaking with someone else the other day, and they said they start with the why. You know, it's like, why do you want to set up an estate plan? Why do you want to look at your finances? Why do you want to look at your taxes? You know, and then make the change. So yeah. Oh wow, very cool.
Yeah, and you have to make that why, you know, it has to be strong, right? Because if you just say, oh, I just want to do it because, you know, everybody else is doing it, which is rare, but, you know, if you don't make it a strong why, something that's super personal to you, something that means something to you, something that will motivate and inspire you to persevere through the hard parts, then it'll be easy for you to just kind of fall off the wagon with it.
Okay, very cool. So do you find that people, something happened. Do you find that people, they track a little bit, or do they just kind of not? So it's like, is it more like, okay, I'm doing a little bit, but I need to dig in more, or it's like, I just kind of just don't do anything at all? Or,
usually it's like, I'm not doing anything at all. You know, people create this makeshift budget in their head. They kind of know how much they're spending, but they're just guessing. They don't really know exactly how much they spend. We do that financial awareness piece where we go through like bank statements from the past several months. People are usually surprised at how much money they spend. You really just don't know. So everybody's just guessing. So nobody's really tracking. And again, once you have a why, you know why you're tracking this. So it makes it easier and better to do it. But yeah, usually when people come to me, they have no idea what's going on.
Okay. So then when setting up the budget, so you do the mindset, you do the financial awareness, and you start working on the budget. And then is that like a continuous process? Do you work with people for a long period of time, or do you just kind of work with them Okay, so we were talking about mindset, and I want to say, do people tend to kind of have anything going, or or are they just kind of like totally lost?
Yeah. So usually people are, can you hear me?
Mm-hmm.
Okay. So usually people are kind of just flying blind when it comes to their finances. They don't really know what's going on. They don't know how much money's coming in and how much money's going out. They're not really tracking anything. Budgeting isn't really a thing that they do on paper or in an app or anything. They just kind of have it in their head and they're just winging it. And a lot of that comes from, so many of us grew up in houses where we didn't learn how to budget.
Right.
We know that it's not taught in school, so it's just something that we just don't know how to do.
Mm-hmm. Mm-hmm. So I hear you mentioned apps. Is there like a certain app that you like to use or that you recommend?
Yeah, my favorite app is Mint. It's just
Okay.
the plain old QuickBooks version of a personal finance app. It links to your bank account for free. You can easily set up your budget. It tracks everything for you. It sends you nice little alerts. So that one is one of my go-tos. There's so many apps out there. That one is like an old faithful. If you go and look up personal finance or budgeting apps in the App Store on Google Play, it's so many of them. And their technology is changing all the time, but that one is like an old faithful.
Okay. And I like that you said that it's similar to QuickBooks and that it links to your bank account, because that's what I always tell people about QuickBooks. Like, it links to your bank account. It makes it so easy in order to categorize your transactions.
Yeah. And that's one thing, we need that. If we're already going to be budgeted, which is hard enough, then we don't want to go in and manually add every transaction and split it up and do all those things. And you can customize it, obviously, but it makes it easy for you to just kind of pop stuff into where it needs to go.
Okay. So do you find that, so you said you work more with personal finance, not a lot of entrepreneurs, but do you have any entrepreneur clients that you work with, and kind of what are the challenges that they may deal with that is different from a personal finance standpoint?
Yeah, so I do work with entrepreneurs, and the same is true. I mean, if their personal finances are a little unorganized or they don't understand how their money is moving in their personal lives, the same thing is true for their businesses. And with the entrepreneurs that I've worked with, because they don't have an idea of their business expenses, or, their personal finances are intertwined with their business finances. So they don't even have separate accounts for those things. Which I'm like, girl, step one, create your business account.
Right.
But you don't have you're not setting a budget. So you don't know how much money you're going to be bringing in. You don't know how much money is going out. So you have all these apps and things and software that you're using for your business, and it's just draining you from your profit and your bottom line. So yeah, it's pretty similar. If you're not tracking your personal finances, it's usually the same with your business, and you have no idea what's going on, how money is moving in your business either. What about you? What do you notice?
I noticed, well, I guess it's the same thing. I just find people, it's a lot of commingling. And that's what, one of my goals is to get people to stop commingling. If it's business, put in a business account. If it's personal, put in a personal account. And it's like, how can you really know what your business expenses are? Just like you said, what your P&L looks like if you're not tracking your expenses, or if they're all mixed in together. And then it allows you to be proactive, right? The same with personal finance. It's like, okay, if you know that, you've made this much money in your business and you need to do something with your, making estimated tax payments, or changing your deductions, or even reducing your expenses, how can you do that if you don't have the information? Right. And that's really neat, because I just kind of started thinking about that the other day. I was like, okay, Marjorie, what are your monthly expenses for your business? Right.
Yes.
And you need to write that down.
Thank you, QuickBooks, for letting me know exactly what that number is, right?
Yes. And it's so easy. It's just a matter of going in and categorizing your transactions once you do it, but you still have to take the time to make it happen. So
and with the business expenses and things like that, like you said, if you don't understand how your personal is working, it's so hard for you to do the business. But we cannot commingle anymore. I'm sure that makes your job much harder.
It is.
When the personal and the business is commingled, and we're trying to take full advantage of all the deductions and credits that we And
Right.
we're like, hey, let me pull up my personal bank account.
Right, right. And then there's so many transactions with the, everyone's using a debit card. There's just so many transactions in your personal business, your personal account. It's like anything that you can do in order to make it easier, will be
Yeah.
better. It's like if we really need to go back to using cash, and just writing everything down. Yeah. So,
Yeah.
so how I know personal finance with generational wealth. So let's kind of talk about how you translate that and how you bring that into working with your clients.
Yeah. So generational wealth is something that we all kind of, especially with yesterday being Memorial Day and the 100th anniversary of the Tulsa massacres, and just thinking about, as a culture, and as a people where we would be if that hadn't happened, and just trying to make our ancestors proud, right? And just doing our part. We have to figure out ways to grow our money. And that's what they did by creating their businesses, by growing their businesses and growing their money. So the investing part is huge. But we can't get to the investing if you have, so much money going out in debt payments,
Right.
and you haven't, created an emergency fund. So that is one of the last things that I talk to my clients about. But, it's super easy to get started investing because so many of us are employed. So we have those tax advantage accounts that we can use, whether it's a 401k or 403b, or even as entrepreneurs, the IRAs and the solo 401ks. There's so many tax advantage accounts that we can take advantage of that makes our investing super easy. So we can take advantage of that compound interest, grow that money super fast so that we can start to create that generational wealth.
Awesome. So by setting up the budget and making sure that you know where your finances are getting out of debt, then you have the money available in order to do the next step.
Yeah, so you can do the next step. And, I do want my clients to contribute to their 401ks and their IRAs and all of those things, even while they have debt. But once that debt is gone, then you can ramp it up even more, then you can, and when you're budgeting, you know exactly how much you can spend. I'm not super into day trading. I like my investments, like my crock pot, like I'm a set it and forget it kind of girl. Like let's keep them pretty simple, steady, tried and true. But if there was something that an opportunity that you were interested in and you wanted to be able to invest in something, whether that was, your business or a friend's business or whatever, or real estate, if you have that, if you've budgeted, right, and you have all of that money in place, you know exactly how much you have to take advantage of those types of opportunities. So budgeting is really going to be, the lifeline for all of your finances.
Very good. I like that. It really is.
Yeah.
Because
really
when you're working with,
yeah, we're budgeting to save money. We're budgeting to pay off debt. We're budgeting to invest. We're budgeting to enjoy our money now. Because I make sure that my clients enjoy their money now too. I make sure that we have line items for, whether you want to call it self-care or entertainment, something that you can enjoy the money that you're earning, because no one wants to just pay bills and perish. We want to be able to enjoy our money now. And I think that's one of the hardest parts with budgeting too. People think that it's super restricting and that they're not going to be able to enjoy their money. No, that's not true. We get to have fun with it too.
I like that part. I do. Because it's like, even if it's going out to eat, or if it's, going to get your nails done, whatever, it's like you still have to be able to live and not be so restricted. So yeah, I like that you take that into consideration too. Okay.
Yeah, I mean, there's also the financial shaming, right? I'm sure you've seen it or heard it, people talking about the coffees. You can't go to Starbucks, or, designer clothes are loud and flashy, and, the wealthy don't own designer clothes, and it's shaming. And it really is subconsciously trying to make certain people feel bad, and it's Black people in particular, right? And you can enjoy your money. You can enjoy those luxuries while still having all of those other systems in place, because we don't know what, that person might be a millionaire. That person might be investing their max to reach their 401k goal. And this might be a splurge purchase. We don't know what's going on with those. So I try not to shame people, and still, find ways to treat yourself and enjoy your money now without shame and judgment.
I like that. Okay. Yeah.
We deserve luxury, girl. We need a spa day.
Yes, yes. And especially when you're being so disciplined in other areas, right?
Yes.
Or if you're making sure that everything else is covered, you can't, like you said, work and perish. You can't just do that. You have to
Yeah.
enjoy life. Life was given for us to enjoy it, to have it more
Yeah.
abundantly, really. Yeah. So,
Yeah.
very cool. Okay. So tell me something unique about the way you work with clients that other people may not do. What makes it unique about working with you? What do you feel?
Yeah, so one of my colleagues, she posted about this yesterday, and it is not my job to come in and tell you where to cut and how to cut from your budget. We work together to figure out what makes the most sense for you. But at the end of the day, my job is to support you so that you can make the most confident, empowered, educated decisions for your life and your goals. And there's no shame, there's no judgment. When you come to me, we're going to be working through all sorts of situations, and I'm just here as your financial friend, right? Your financial bestie that can kind of help guide you through the process.
Okay. So do you do is it multiple sessions? I'm sure it's multiple sessions, but how does someone price working with a financial coach?
Yeah, so different coaches have different, service offerings. I know several that do like a 1 month session, some that just do like single sessions, so like a strategy session, one-offs. But I really do care about the work that I'm doing, and I care about my clients, and I want to see you guys through this. And usually for just the budgeting portion of it, it takes about 3 months of consistent budgeting for you to start to feel comfortable with budgeting. So if I just get a 30-day program, you might not be feeling good about that. So I've extended my services. So I used to do the 90-day, the 3-month programs, but really that is just getting you to the budgeting part. So if I've extended my program, so now it's 6 months. So probably one of the longer of financial coaching sessions or services that I've seen out there, but it really is so that I can work with you through everything, so that after we've gotten comfortable with budgeting, then we can tackle the savings, then we can tackle the debt. Once you start tackling the debt, the credit kind of falls in line, but I'll also show you some other ways to help with your credit, and then we can talk about how to maximize the investments and things like that. But it's such a hands-on process that I don't feel comfortable just leaving people after one session or 30 days or 90 days, that I had to extend it to something longer, because it really does take that support and that partnership to see some real results.
Wow. That's okay. I'm not going to say it's scary, but
I mean, it is a big commitment, right? Like, that's why you have to watch my stories, see if you like me, because we're gonna be working together for a while.
Right.
But it is very important to feel comfortable with your coach, because you're gonna be sharing one of the most intimate parts of your lives, your money. And again, especially because so many of us grew up in households where we didn't talk about it, it seems super taboo. So it is kind of, it is a little scary when you think about talking to a stranger about it, but I promise you're in good hands if you come to me.
Okay. Very cool. So is there anything?
I do have a question for you though, because again, my clients or my followers have identified their taxes as something that they feel like is scary. Like, what are some big, why do people feel scared about their taxes? Why do you think that is?
I think it's because it's an unknown, because you don't understand your taxes. It's important to understand. So I wrote a course, I'm going to shameless plug, but I wrote a course, and it was about understanding my taxes. I have two. One of them is called Understanding My Taxes for Individuals, which it kind of goes over, if you have a business, how that plays into your individual tax return. And then there was one for people that are trading stocks and options, because a lot of people were trading stocks in 2020. And it's like, okay, you're going to have a big tax bill. And so I think it's the unknown, and the fact that it's the IRS, they can seize your assets. They can, pretty much do what they want to do. But if you do what you're supposed to do, then you don't have to worry about that, right? So if you're paying your tax bill, or if you making your estimated tax. So if you're responding to notices, they're not just going to come in and take everything. It's like they give you the opportunity to, respond to a notice. But I think the bigger part of it is that they just don't understand. So like one of the things is, why do you owe? What could you have done differently? Like I was talking to someone recently and they were saying, well, had I done my taxes in 2019, then I would have structured things differently so I wouldn't have had to pay for 2020. And that's why you should talk to someone and get the information so that you understand what's going on with your taxes and you can make adjustments accordingly. Right. Yeah. So that's it's not just an entrepreneur, it's an individual as well. So, if you have a W-2, if you're just an employee and you have a W-2, if you're not taking out enough money in withholding and your salary goes up, then you're going to have a big tax liability. Right.
Yeah.
So it's a matter of knowing, or you don't want to take out too much in taxes and then at the end of the year you get a big refund. It's like, is that really a refund or are they just giving you back your money?
Yeah.
Right.
So I know I was gonna make a long post about that, but tax season felt like it was all year last year because all of the the extensions but people get so excited about these tax refunds. It's not really a refund. It's your money that you're just getting back that they just held for you all year long, and you could have invested that money. You could have used that money to pay off that. You could have used that money in your pocket throughout the year, whatever the case may be, if you knew how to properly.
Right. So if you had a budget, if you knew what you needed for your, for your monthly expenses, if you knew what to expect for your tax return, you can do something different with that money.
Yeah.
So, and that's where tax planning plays a big part of it too, is, sitting down with someone. So one of my goals for June, July, and August is let's look at your tax return. Let's look at where you are up to date, and what you need to do for the rest of the year in order to reduce the amount that you pay. So
I love that. I love that proactive approach to it, because I feel like so many people just go and once a year to their CPA and they're like, okay, here's what I got. And they just kind of just take whatever they get. Like there's no strategy in it. So I love the tax planning part so that we can be as proactive as possible. Like, do I need to move my, cell phone into a business account? Do I need to, what can I do? What strategies can I use to take advantage of all the deductions and credits and stuff, right?
Right. Or even if I get a raise, if I get a raise of 2%, is that really going to make a difference in my bottom line? Why don't I just put it in my 401k, right?
Yes.
That part. So it's reducing my tax liability.
Generational wealth.
Yes. And you're used to living. So I tell people that all the time. It's like, you're used to living on a lower amount. So why make any changes? Just keep living on that same amount and put that aside, put it somewhere else, and that's how you trick yourself into saving money, right? Because if you don't see it, you can't spend it.
Yes, automate it. It's out of sight, it's out of mind, right? Like I said, that's a slow cooker. Just set it and forget it.
Set it and forget. Yeah, and that's it. So everybody should have some of that. So, and that's the same with business. It's like you have to kind of hire a solo 401k. If you're an S corp, put your money away. Don't put it all into making tax payments, right? You can set up your 401k. Your company can match your 401k. It's all your money, but you have a tax expense, and you're contributing to your retirement. So that's what.
I love it. The tax planning and the strategy. Again, like just being proactive about it. Like you said, like so many people are afraid of, what could happen if you just were a little bit more strategic, right? To either prevent it or to avoid it altogether.
Right. Or at least to know and to plan for it. It's like if you know you're going to have to pay $100,000 in taxes, okay, what do I do now in order to set that money aside so that it's there, right?
Yeah. Budget.
Budget, yeah. Budget. Oh, that budget word. So, I tell somebody, I don't mind doing it. But I think for me, it's because I look at numbers all the time. Just like, I don't want to do my own numbers,
Yes. It's like everybody knows that hairdresser, that hairstylist whose hair is never done, right? It's the same thing. When you do it all the time for a living, it's like, oh gosh, now I have to do my own
I have to
too.
do my own too. Yeah. So
Yeah, but you do it regularly.
mm-hmm.
My budget conversations and meetings with my husband used to take hours because we're like trying to figure out every single dollar and moving this in here and doing all of these things. And now they probably take like 15-20 minutes, right? We're just checking in, everything's still good, and because we've been doing it so long, it's like second nature.
It's like second nature.
And so, the more you do it, the more you practice doing it, it becomes easier.
It becomes easier, yes. And you also start to pay attention to different things when you're doing it, right? So even if it's putting your business expenses and, paying in a separate bank account, you start to pay attention to that bank account more because there is another account. It's not just mixed in, right?
Yeah, exactly.
So,
So you'll notice different charges of like, oh, this is higher than it usually was, or, my account is lower, what's going on there. So, just having an eye on it, right? Like you can see if there's discrepancies, if there's, an influx of charges, maybe your husband went on a shopping spree. So doing it regularly definitely helps so that you have that awareness all the time.
There's awareness all the time. That's awesome. Okay. So I'm going to work on that. Yeah, I know.
It's not that bad.
It's not.
Again, especially if you're in QuickBooks, like you can literally link it to your QuickBooks account. It's so easy. They made the interface on it super easy.
So you can link QuickBooks to Mint?
Yeah. So it could be your same login. If you use the same email address, so it'll be the same login. So you don't even have to remember another password.
Right. They do have to
I feel like
it.
Yeah, I feel like the interfaces on them are pretty similar. So if you're used to using QuickBooks, it'll be easy to just kind of pop into Mint and just move some stuff around, see what's going on. And the tracking part of it is really the hardest part because you don't want to have to say like, where did I spend money? Where did I spend my card? It does all of that for you. So you're just putting it, so you're just keeping an eye on it, seeing where it's going. Like, okay, we're getting close to our grocery budget limit. Do we need to move some money from somewhere else? Do we need to eat in the house more or, eat some ramen noodles? What do we need to do if we want to stay in line, right?
That's cool. And then it kind of memorizes it as well, right?
Yes. So once you've set it, it'll pretty much mimic, from month to month what your expenses will be, which is super helpful for your predictable expenses like your mortgage, car insurance, and things like that. But your variable expenses, it gives you like an average, and then you could always change it. One thing that changes for me from month to month, aside from food, because I have my children home with me, is gifts. Right? Because gifts every month, I feel like somebody's got a birthday, there's a holiday, and I'm like constantly buying gifts. So each month, that is one of my biggest variable expenses. So I'm in there constantly changing that and updating that in Mint, but pretty much everything else it's the same. And it'll give you a good baseline on like what you usually spend. So like this month is extremely high. Like what can we do to change it? Or, this is just a one-off just this month. So you can make adjustments wherever you need to.
Okay. So do you have the like, or are you strict with budgeting like the every dollar, where every dollar should have a home or an assignment, or are you more lenient?
Yeah, I do like the zero-based budgeting, right? That's the every dollar has a job, but I also leave, it's a little miscellaneous. So I leave a little buffer in my bank account. So if, I go over my groceries, or if I'm like, oh crap, I need to get my kid new shoes this month. If there's something that ever comes up, there's a little buffer in my bank account that I use as a miscellaneous line, so that I can just have that flexibility in my budget. Or if I, want to go out with the girls one night, it's a last minute happy hour, or, brunch, I can add that in there because there's already that buffer in my bank account. But yeah, everything else has a job. Right. We know how much money is going to go to savings. We know how much money is going to, we don't have any debt anymore, but you would know how much money is going to debt, how much money is getting invested, right? You know exactly where everything is going when you tell every dollar what to do.
Tell every dollar what to do. Okay. So say for instance, there's someone that's, that living paycheck to paycheck and they just don't feel as though there is a way for them to save any money. What would you suggest? What's like a plan of attack for them?
Yeah. I mean, when you feel like you're living paycheck to paycheck, really sit down. I tell my clients to scrutinize their bank statements like they were at a group dinner at the Cheesecake Factory, right? Like you go through every line item. Like I did not have the chicken, I had the fish, right? I did not order another drink. You go through every single line and you really start to kind of scrutinize and see, are these things helping me get to my goals? Are they hurting me? Is this something that I can, I really don't care for the word sacrifice, but is this something that I can suspend? So that I can get some room in my budget? Is this, I would start there, because usually there are so many things in our monthly spending habits that we can kind of just, again, either suspend or temporarily eliminate to get you some relief from that paycheck to paycheck cycle. If you cannot find anything in there that can go, then, it'll be time to start finding ways to increase your income. And if 2020 taught us nothing else, it taught us that we know how to make money, because everybody was pivoting, everybody was creating businesses. And so there's so many opportunities out there to increase your income, whether that's temporarily or quickly through like Instacart and, Uber and all those sorts of things, or creating an actual business. So there's so many ways to increase your income, but start with those two things, right? Get clear on that bank statement, see what you can do to lower your expenses, to get yourself some relief. On the other side, you want to increase your income, and those are just like the two quick fixes.
Okay, and that's good too, because with Instacart or Uber or Lyft, it's like you just have to have a vehicle, and you can go out there and you can make $20-$30 in just in a couple hours, right?
Yeah.
And you can get paid automatically instantly. So it's not like you're having to wait for 2 weeks for a paycheck. So
yeah, I think some of them, they pay you weekly. I think Shipt pays like weekly or something, but it just depends on the company. But it's pretty quick, right? Like if you need fast money, those are really good options, because most of us already have the cars and things to kind of go into it. So it doesn't take a lot of time or money to start it up.
That's good. That's really good. Okay, I like that. So there is always hope. You're never hopeless. There's always hope, right?
Yeah. You are never hopeless. You are never hopeless. I had someone message me today about her husband is considering bankruptcy. And, I do think that there are some situations where bankruptcy is absolutely necessary. But there are so many situations where you can, without damaging your credit and your overall financial health for such a long time, create some relief in your life and, start to achieve your goals, whether that's saving to pay off that debt, right? That's causing you to want to file bankruptcy, or saving money. There's so many ways that you can get out of that. So there's always hope.
Always hope. Yes, always hope. Okay, cool. And do you do a lot of things automatically? You did say put in the slow cooker and let it cook, right?
Yes. Yeah. So all of my investments are automatically withdrawn. I have savings accounts, like little savings accounts for my children. That's all automatic. I'm saving money to go on a vacation at the end of the year. So that's automatic. And then, each month, if there's a surplus or something, I can throw more money in there, right? But that is all automated. My bills are automated, with the exception of, I think, just one, because it's just so much easier. I used to forget to pay, like, I never know what day it is now anyway. So it just makes your life so much easier when everything is automated. And I was leery to do that before, because I didn't have a budget. I didn't know how money was moving in my life. I didn't know when it was going to be coming out. So I didn't know how to plan for when it came out. So then it would come out, I would go into, overdraft, or, it would come out at the most inconvenient times, right? So having that budget really created that system that let me confidently put everything on autopilot
Right.
because I know exactly how money is moving now.
That's good. That's good. I like that. I do a lot of things automatically. I read the Automatic Millionaire before, and so I don't like paying bills. So I just have them all pay automatically.
Right.
So I just make it like there. Yeah.
Yeah. Who pays it? Yeah, just go and get it. Just take it.
I'll look at it. I'll know, like if because you get an email that tells you how much the bill is going to be or whatever. It's like, okay, if that's going up, it's like, okay, yeah, we need to look at that. But for the most part, it's like, I don't like paying bills. So just, make sure the money's there and move on. Right? Yeah. Do other things with my time.
Exactly. Exactly. Because, we're already having people budget, right? Which isn't their most favorite thing to do. And now we're going to have to sit down on a separate occasion and write out checks and, mail them off. Like, let's just go ahead and automate it to make your life easier. So again, we can have these 15, 20-minute budget conversations because everything's on autopilot. All we're doing is just checking in to make sure everything is running the way it's supposed to be.
The way it's supposed to be. I like that. Okay. Very cool. So mindset, financial awareness, budget, autopilot. That sounds like success to me. That's how you get to generational wealth.
Yes. I love it. Yes. It starts with the mindset, right? It starts with the mindset. Then we'll be budgeting our way all the way to millionaire status.
Millionaire status, yes. Okay, so let me just ask you, do you have a particular thing that you like to invest in?
Yeah, so most.
Go ahead.
Yeah, so most of my investments are in the stock market. I wanted that instant diversification. I didn't personally care for tracking the market and seeing, what's the next big company, what's the next big industry. So index funds. You are literally tracking index funds. So you're literally tracking an entire market, especially when you get the ones that are tracking like an S&P 500, you get that instant diversification. Again, set it and forget it. Those are tried and true. So if you don't want to have to worry about risk and all of those things and time in the market and when to pull out, it's index funds are amazing. And then I'm actually just getting into real estate, which is exciting and scary. But my family, I think I mentioned it before, but my family is from DC. And so my family has 4 properties in DC. Awesome. That my elders have. And I am working really hard right now to make sure that those all stay in the family, because real estate in DC is very expensive. And it would just be really nice to be able to keep that in the family, right? Generational wealth, and pass that down to my children.
Yes. So you need to talk to an estate and trust attorney and get those in a trust or something so that, nothing happens to it. Yeah. Don't sell grandma's house. That's what they say, right?
No. Yes. Do not sell grandma's house.
Don't sell grandma's house. That's awesome. Very cool. I look forward to hearing all about that.
Yeah, the real estate stuff, again, especially because my investments with my stocks were so boring. The real estate stuff is really exciting and fast paced, and it's nerve wracking, but I'm really looking forward to it.
Awesome. Okay, that's cool. And I like the index funds too. I'm speaking with someone else and they talked about that too. So I need to do some research. I'm like I said, I'm an automated person myself, and I just really like to set things up and forget about it. I don't have time to do all that research. So
the index funds are amazing for that because again, you are owning pieces of every company instead of just tracking just one, right? That's that old saying, don't put all your eggs in one basket. But an index fund, you're already spreading your eggs out. So if you invested 100% in index funds, you are automatically diversified. Yep. So that is a super easy way to, and just about every brokerage has some sort of index fund that tracks the S&P 500. So it's super easy to even identify those types of accounts. They usually say it tracks the S&P 500. So they make it really easy for you to be able to invest.
Okay. So one other question. Back in the day, there used to be like, I want to say Transamerica had a mutual fund that you could join, and you maybe pay $25, and then you can do like an automatic payment of like $25 per month. Do you know of anything like that for someone that's just getting started that may want to just say, hey, I don't have a lot to invest, or I don't have a lot, in my budget, a lot of wiggle room, but something that they can do that would do that?
Yeah, absolutely. So, well, first I would say check with your employer first before you go out and go to a separate brokerage, because if you especially if you don't have a lot, just throw that contribution to your retirement through work already. But if you do want to go out and do a separate like not a tax advantage brokerage, you can do that. Fidelity is a great because you want to just make sure that there's no minimum to invest. Most of them will waive that minimum if you have an automatic transfer. So if you just no minimum automatic transfers, it's super easy to do those too. Yeah, there's a Fidelity, TD Ameritrade, Betterment. There's a lot of robo-advisors that are coming out, robo-advisor brokerages. Those are super easy because they don't have people. So it's literally robots. There's an algorithm. There's an algorithm that's going to be managing your investments. So they have super low fees. So they can offer you an account with 0 fees. They can offer you an account with, no balance, so they can attract more people that way. So the expense ratios on those are super low. So if you're looking to get started, you might want to also look at like a robo-advisor, but that's if you've already maxed out your 401k, IRA, and all of those things, and then you want to go there.
And definitely invest in your 401k if there's a match, right?
Yes.
Free money.
Free money. Yeah. I wish younger me knew that. Left so much money on the table.
Yeah, but you live and you learn, right?
Yep. And now I teach other people not to leave money on the table.
Yeah. And that's something we need to get into too, is getting to people earlier. The younger generation, financial literacy, accounting, tax, business, entrepreneurship, all of those things we need to work on getting to them sooner so that they have the opportunities to grow and have a longer time, in order to benefit from that income or from that knowledge.
Absolutely. Again, one of the reasons why I, target or, my audience is moms, is so that we can teach our children, because I am teaching my children. My son started learning about money when he was 3. And he started getting an allowance or a commission, whatever you want to call it, at 3 years old, so that he could start to learn, how to budget. He budgets his little allowance. He saves some, he spends some, and then he can give some away to kids in need. And so teaching them those things early. My daughter's getting right to that age where she just got her first bill. So there was an app that has a monthly subscription that she wanted to get. So I, let her get it. But I'm like, okay, this means that you now have a monthly bill. Every month you have to pay me this $7. And she agreed to it. I should have made her sign it. But like teaching her these, but it's a life skill, right? Like, so teaching them these life skills early so that they have the knowledge. So when they're getting to adulthood, they're not starting from zero. And we have to sit down and have this long conversation to our kids. Okay, this is how you budget. This is how you do your taxes. Right. We have to naturally and proactively teach them young how to manage and just about life, because there's so many things in school that they're not teaching us about life.
This is true. Yeah. I had a little person today tell me that they found something and it was in their budget. I'm like, budget?
Yeah, I love that.
teaching the little ones, you know, that every time they go to the store, you're not supposed to get something, and
Yes.
don't think that money, it just grows on trees. You know, it's like,
Yeah.
no, every time we leave, you do not get something when we go into the store. You know,
Yeah.
and here's this, you have this much money. And so now it's like,
Yeah.
okay, you can earn your money, you know, so that then you can go and do it, not that what you want to do it, but, you know, earn, you know, save some, spend some, give some, you know.
Right.
Yeah. Mm-hmm.
Yeah.
So yeah, we have to teach them.
We have to teach them, you know, we can tell them, but we can show them so much better, right? And so many of us, you know, the majority of our income is earned income.
Mm-hmm.
You know, I'd love to say that we all just passively have, you know, all of our money coming to us, but so many of us have earned income. So I think it's very important, you know, especially as we talk about legacy and generational wealth, to help them understand earned income. You have to work, and then you get money. And that is how you have the things that you have. We are working to get these things, and you know, just not raising entitled children, so that when we build this wealth, we're handing them all of this money and they have no respect and no regard for it, and then just squander it. So, you know, there's definitely a lot that we can teach them and show them from an early age about how to, you know, create their own legacies and maintain ours.
Awesome. Okay. Awesome. I love it. Do you do any like financial literacy classes or forums or anything like that? You been involved in any of those?
Not right now. No, I am. My network is getting pretty big. So, you know, we're talking about financial literacy. I'm connected to a woman who works with a national nonprofit who is working tirelessly to get financial literacy taught in every high school as part of a graduation requirement. And so there's been a lot of things that I've been, you know, privy to, like just watch from the sidelines, and I haven't been too active yet, but I'll get in there soon enough.
Okay. Awesome. Okay. So is there anything that you would like to leave with the listeners before we go?
You know, I just want to leave, you know, we just kind of mentioned it a little bit ago, but there's always hope. I feel like so many times when people think about their money situation, whether it's their business or their personal finances, you find yourself feeling a little hopeless. And so I just want you to always know that there's hope. That starts with the mindset shift, right? And just knowing that you can have whatever it is that you want to have with your money with a little work.
Awesome. I love it. Very cool. Well, thank you so much, Tiffany, for being a part of the CPA Lady podcast. I know that our conversation, your knowledge is going to help the listeners. And we'll be sure, you know, everyone be sure to follow Tiffany at the Lotus Legacy.
Yep.
Right?
Yes.
On Facebook and Instagram, correct?
Yes, ma'am.
Okay, awesome. Thank you so much. Thank you for watching.
Thank you for having me.
All righty.